Valuation of startups. How it is useful, how it is important for private equity funds and venture capital funds. Now, the SEBI Stock Exchange Board of India is calling for details on startup valuation from private equity and venture capital funds to encourage to enhanced transparency. There are over 900 private equity and venture capital funds in India. Those who are investing in startups and as venture capitalists. Many high net worth individuals have been investing in these funds. How startups are valued determine a fund's net asset value. Artificially boosted net asset value can mislead existing and new investors. For this reason, SEBI is calling for details of valuation methods adopted by private equity funds and venture capital funds with regarding investments in startups. SEBI also asks private equity and venture capital funds to share details of valuer's qualification, whether the valuer hired is an association of sponsor, any change in valuation methodology in the past 3 years, among other things. SEBI is calling many details. One among them is the qualification of valuers and the change in methodology of valuation, and also whether the valuer hired is an association of the sponsored company. The aim of calling for information, the main aim for calling the information from the startup valuation is to achieve consistency in the way valuations are carried out and increase transparency in the investor's interest. To protect the investors' investments, the SEBI is calling for the details of valuation made for startups by private equity and venture capital funds, because many high net worth individuals are investing in these funds, which are again investing in startups. The capital market regulator SEBI is taking a close look at how private equity houses and venture capital funds valuing the startups and unicorns they bank and unicorns they invest. A prop-up valuation gives a rosy picture of the portfolio to a fund's investors and paves the way for the fund manager to attract more money from new as well as old investors when it goes for the next round of fundraising. So valuation is most important aspect for startups. Protect the investors. The SEBI is calling for the details, and which is most important for further investments. This step taken by the SEBI maybe driven by complaints from investors and recent reports of accounting of a few unicorns. The Securities Exchange Board of India asked a large number of funds to disclose their valuation practices and share details like the qualification of the valuer, whether the valuer hired is an associate of the fund or its manager or its sponsor, and if there was a significant change in the valuation of methodology in the past 3 years, among other things. SEBI clearly wants to understand the credibility of valuation exercise undertaken by funds to protect the investments of investors. SEBI may also wish to understand the valuation practices prevalent in the industry, as the same may vary or change across funds in the absence of any regulatory prescription. Since there is no standardized procedure for valuation, the SEBI wants to there may be a change which may lead to overvaluation of startups and may cause loss to investors investors of private equity funds or venture capital funds or high net worth individuals when they are going to invest in startups.